trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, let's just take a look at the NASDAQ. Last night we had a really strong rally. You know, we made the ABCD pattern right here overnight. And then you can see we had a really strong rally, 320 points in the NASDAQ, basically straight up, stopped right at the 61% retracement. We had the big breakdown. Now, I always talk about, you know, the importance of 382 and what it means and stuff, but folks, it really means a lot. What I'm going to do now is switch this over to a 3-minute chart just to show you, well, let's do 4 minutes. That way we won't have to mess around much. There's where we go. Okay, here was the big break. Okay, now here is your... It's only 4 minutes, but remember that's a little half an hour, but it's a price because there's your high right there. I'm just going to point it out to you because sometimes they work, sometimes they don't. So there's where you are right there. There was your 382, and you came right down really, really hard. Now you made a lower low. I'll have to take care of that. Just there it is right there for the next high right here. We came right up and we went right back to the 382, and now we're coming down to this level right here. And why is this important? Because we're going to get the hourly chart up here like we did before. You see, if we start breaking below that, we're breaking below the 61% retracement. Okay, that's one thing that's going to happen. And then also you're going to have the 1.618 of that MEV. I'll take care of that later, Richard. Get that out of the way here. And hold on just a second. We got that. Move that out of the way. Okay. Anyway, that's why I have you can see a little red line there. There's my beepers. I want to see if it gets there and how it does get there, because we have a bifurcated market. You know, the Dow Jones is still up on the day. It was up. It's had such a swing in the Dow Jones today. You have to be a magician to, oh dear, just a second. I got to take Billy Ray Valentine's on the line. Billy Ray, I'm on the radio show now, buddy. I have to call you in about 50 minutes. Okay, pal? All right. See you later, pal. Bye. That was my second student ever, folks, back in 1986. Jimmy Elder, Billy Ray Valentine. His father actually trained under W.D. Grant. He comes from a family of doctors, but his dad was a trader, and he worked with W.D. Grant. And you know, it's not none of the stories you hear about that stuff. It gets blown out of proportion, you know, all the time. So let's get back to where we were talking about for just a second ago, and that was the Dow Jones. I'm going to get this up here to show you. See, I've been watching the ABCDs and the Dow Jones. You can see now we're heading into a down zone here for the next hour is what it looks like. You can see there was your ABCD pattern right up in here. Then you backed off a little bit, made another new high. Now it's starting to move. That Dow is totally different because you're only dealing with about 20 stocks that are triple digit. The rest of them don't mean very much at all. Okay. Now, I wanted to take a second here to go over a couple of stocks. First of all, one of them is Google. Today, when the Dow Jones was up 300 points, this is what Google was doing. It's not in the Dow, of course, but it made the rest of the stocks move higher. Now it's backed off quite a bit. Okay. Now, everybody that's bought that, okay, just about everybody that bought that still has a slight profit in it, but not very much. So we're going to move that out of the way, and I still think I have where's my Tesla at? I'll do the Tesla in the next segment. I wanted to talk to you about, I love trading cattle. I wanted to show you the cattle market because we had a really interesting situation here in the cattle. Hold on, I get that hourly chart up here first. And here's where we are. Okay. Oh, let's do the daily, because the daily is what I was watching for. Okay, there's the daily. Now, the other day, we hit that exact 61% retracement. Okay, then we had a really strong move. Okay, the last 3 days, the market came back. Yesterday, it stopped right at the 61% retracement again. Folks, this is why you really want to watch 382 retracements. You would think this would be really major resistance. Well, it turned out not to be. If you'd have went down to the 8-minute chart, okay, I've got it put in here. Look at this. This is from Tuesday, Wednesday, Thursday. Look where we are here. 382. Here's when we pop through it again. See, there's where you busted through the old 618 right there. Okay, and look where we've gone, another 2.5 points higher. And just by looking at it, you can see each of these moves here, it just wants to go higher. You don't want to stand in front of that. In fact, you try to buy some of it, which is not a bad idea. But look at this, what happens when you pop above the 1.618 expansion, folks. That's the number that's etched in stone. That's pretty much it. All right, someone's asked a question about Tesla, so I've had it up here before. I've looked at it quite a bit. The news has been very bullish on Tesla recently. Everybody's talking about it, the fact that it's an asymmetric bet because you're betting on one person, and that is Nikola Tesla himself, reincarnated as none other than, you'll never guess, Elon Musk. Okay, now here is the daily pattern. Let's get down to the hourly. I just wanted to show you what's been happening in this for the past 16 trading days, I think. Let's move this out of the way. Let me do the 8-minute on that. I think that would be the one that would show it probably. There's what I want to see. Yeah, look what's been happening here, folks, over the last, let's just draw it in like that. Now, I think I have to do the hourly because you can see there's where we were. We made the ABCD right back here when it made new all-time highs, okay? Since that time, look at this, folks. It's been a lot of bullish news, and look what's been happening. The market's dropping. When markets drop on good news, that's not a good thing. Look at this morning. It was up $8 at one time, and now look at it. It's down. See, this is another reason why these markets are beginning to look, when good news comes out and markets don't go up, they have only one way to go, folks, and that's to the downside. So remind yourself, and that's right out of it. If you want to read a great book, it's Jesse Livermore, Reminiscences of a Stock Operator, and we'll see if that's going to be the case or not. So let's move on here and see. Haven't heard any beepers going off, so that's a good sign. Hold on one second here. We'll get the rest of these up and take a look at it. Did the Google. Here's where we are. This is the YM, and there's where we go with the rest of these. Hold on one second here, folks, because I try to line everything up and I not get too confusing to everybody. Now, we'll talk about silver, because remember silver, we talked about that the other day. We had this pattern up. Now, we were doing gold. We didn't do silver because the margin on the gold is a lot less than silver. Then the market came down. You can see here, did not make a new low. Then it made a lower low. So that means you have a new 382 coming in, correct? If you make a new low. So you've got to take that out. And this was, of course, this new low was done New Year's Eve. And you'll see here, there's where we were from that high. And where did it go to? Almost exactly where the gold made the exact 382, silver missed it by just a little bit. So we are in the midst of a very severe correction coming here in these markets here. So now what we're going to do is take a little break.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, to keep everything from being too boring, we're going to take a look here at a possible trade here. Now, this is gold. Now, you can trade micro gold, which is good. You know, the margin's only like 98,000 or something. I think it's $2,500 or something like that, as opposed to 25,000. But we have an ABCD pattern forming right now. There's your, you can see them all the way down. A, B, C, D, A, B, C, D. We got a nice one right here. There's A, B, C, D. These are equal. There's your 382 again. Remember, off the high, doing the same thing. That tells us that if this is correct, and maybe it works, maybe it doesn't. It's all, you know, not a crapshoot, but definitely a dice game. And that would mean that we could get it right here, get the gold down here. Well, it's going to be a pretty big break to get it down there. Let me see, 327 to that's $26, but it looks like it's bottoming right now, folks. Now, we made that low by just a little bit. So if you bought it right here, you only got to risk about $7. So I'm going to be buying the gold right now because it's getting ready to go higher based on this cycle right here. Now, remember, that's only going to last for about an hour and a half. So I just bought it at $28.70, okay, for $28.70, and I'm going to put a stop here. I'm just only going to risk $6. It gets down to 28, 22, 4, 22, 22. I'm going to risk $6. So at 422, I'm out of there, and I'm not going to have anything to do with it. Folks, I've had a good day in gold today, so this doesn't mean a whole lot, but that's the kind of thing that I'd like to see. I'd like to see it get down here, but it's not. It's already starting to turn, so I'm putting my stop, a dollar stop. I don't want to risk more than $600, okay? That's basically what I'm looking at right here. So whether it works or not, I don't know, but that's what I'm watching. Okay, let's move over here. And we want to talk, excuse me, folks. Sorry for got too many frogs in my throat here. It's been raining here for 13 of the last 14 days, and we've got 4 more days, and then it's supposed to be over. Folks, I have to tell you a great story. You know, over the years, I've had oh dear, almost 1,000 students in 54 years. Some of them I've got to know pretty nicely. 10 or 11 of them have moved to Tucson, not because of me, they just like Tucson. And I was in Hong Kong 7 years ago, and I had a team that I was training. They worked for what was that company's name? Oh, anyway, it's a big bond firm out of London, husband and wife. And I said they would come to Tucson and train with me for 3 days and had it all set up. The problem was they showed up in Tucson and I was in Hong Kong. I totally forgot. Only time I ever forgot in all those years. Luckily, I had a good friend who was a good trader. And I said, Gino, can you take these guys out to dinner and tell them I'll send them the money back? And I said, but I'm just embarrassed. And I said, try to, keep them entertained. Well, entertainment went a little out of hand. They actually got along very, very much. And of course, Gino was a cowboy. They had some motorcycles, so they got to ride motorcycles. They got to go to the policeman's range and the cowboy range and shoot the long guns, the Sharps rifles and stuff. And then the 3-day thing was 9 days later. I get back from Hong Kong and they're still there. So I did get the 3 days in, and they became very, very, very close friends over the years and got to go to London and visit them. Okay, let's move on here and get to serious things. But yesterday they called me every New Year's Eve to tease me about it. And it's well to be teased, but it's the only time I did miss one. All right, let's move over here. Boy, look at this gold, the cattle today, folks. Look at this. This is just an 8-minute chart. This is a huge move here today. Wow, like that 382. That's pretty good. There was the easy buy was right here this morning. Okay, that was the easy one right there, the 382 of that one. There's your opening range. There's your 382. Then we went popping above the 1618. Boom, away it went. So it'll be other things coming in, but that's what you want to be watching. Those 382s are monsters, upside and downside. Okay, we're getting a little bounce here. This is what I wanted to see. I didn't want that market to fall apart yet. Let's get the gold back here because we got going to get back here to where we are. Okay, now we have a stop working at 22. Now we got as high as 31. Okay, so I'm going to lower my stop down here to 24. So I'm only going to risk $400 instead of $600. So my stop is going to be at 24. I bought it at 28 and change. 24 is going to be my stop. All right. Now this is how I managed. I try to manage the money the best way that I can. And the only way I can do that is by putting a stop in and asking myself, how much can I risk? It's not how much money you make on a trade, folks. It's how much money you don't lose. That's the real key, because you're going to win. You're going to win it if you do this halfway decent. You're going to win 50% of the time. What you've got to be able to do is make sure that the 50% that you lose are not these monsters where it's a really good buy right here. Oh, it's a really good buy right here. It's a really good buy right here. It's a really good buy right here. Yeah, it's good buy house, good buy car, good buy boat, good buy wife. We've been in all those trades. Those of you guys have been around for a long time. You know what that's like. That's just not very much fun. So that's what we're paying attention to. I can't handle it any better than that. It's doing what it's supposed to do. Sometimes it wins, sometimes it doesn't. So you guys already know that. So that's not a big deal. We'll get this out of the way. Oh, excuse me. I'm sorry, folks, but I really got this sore throat that I've got because of this weather. It's just, I'm not used to this. I'm used to desert weather, but this is unusual, but that's the way it's going. Okay, Google. We want to talk. We've already talked about the Google. Let's have one other stock here. We got Stan coming up here at the break. He's going to save the bacon. We're going to take a look at the euro, and because that euro I still think has got a really good potential for a move to the downside. If I can just find it here in the thing here today, there it is, and we'll just open it up today. And you can see we're still heading down. There was our number right up in here, 118. We're still heading down, 117, coming down very slowly. Look at this. It's just very slowly. We're down 1, 2, 3, 4, 5, 6, 7 days, and that's all we've done in 7 days. That's probably nothing more than another 382 right there. No, it's 50%. Is what we hear today, but it was a bigger move than that one, which tells us we're still heading down. We're having a little bit of a bounce, so let's look at the 60-minute and see where we are. Okay, there it is, the last few days. There's your 60-minute. And, You can see you've got lower tops all the way through. Now this is a big rally here, folks. See the time that it took to do that? Those are the ones. This took less time, but it went higher. But this took more time. That means that the cycle was really completing. It took longer to complete it. That means that from this high to right down there, you see it went to 50% instead of 38. Well, that's only a difference of 16 pips, so that's not very much. Now we made a lower low. Right? So that's the next one you want to do. If you made a lower low, you've got to recalculate. So if you go from your high down to your low, bada bing, bada boom, money in the bank. Let's make a tank. Anyway, we're going to take a break here and talk to Mr. Stan Harley of the Harley Stock Market Letter coming up here in just a moment. And how much time do I have left? 42 seconds. Sorry, Al, we'll get to Apple then. I always get into that old 40-second routine. So we'll get right here to Apple. And I still think it's doing okay with the zeros up here. Is it down today? Well, it was up, and then, wow, that was why the Dow was up so much at one time, I guess. Look at that. That was way up here, and look how much it's given back. That's $8. That's quite a bit. Let's see if that was a 382 off of this last high. So Stan Harley's coming on, folks. Stay tuned. There was 50%. So.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're back, and we have Stan Harley in the house. Stan, Happy New Year to you, my friend.
Mr. Pesavento, master trader, analyst in California with the rain. Happy New Year.
Pick one of the three. The only one that's correct is in California with the rain, but go right ahead. What do you got for us today, my friend?
Oh, boy, you and Ron White, two of the best comedians I've ever known. Yeah.
Yeah. Red Fox.
I thought we'd take a look at a couple of markets here today. First, I wanted to look at the stock market and start off with the bigger picture, and then we'll go to the smaller picture. The weekly chart I'm putting up on the screen right now, and what I have found here, interesting. There it is. Chart's coming through now. The market does what I call a primary cycle. That is, the dominant lows on the weekly chart tend to be somewhat variable, but I've analyzed them, and I found that there is a nominal time period from bottom to bottom, and that time period is about 33 weeks. Doesn't mean every 33 weeks there's a bottom, sometimes a little more, sometimes a little bit less. But if we look at the plethora of the data and put it into a spreadsheet, we'll find that the average falls right at 33 weeks. And I'm not sure my chart's coming through. Are you seeing it on your screen?
I have data blocked right now, so I can't really see anything other than
Okay.
What do they call it? Teams. That's all I can see right now. I only have one little screen, so I'm not able to. I can tell you right now whether they'll tell me that they can be seen. They're still seeing the screen, but it's the opening screen is all they're seeing. They're saying
they're just seeing the first screen. Well, doggone it, I don't know why I'm having a problem. And I've had problems with you lately, and I don't know
fortunately,
why.
you're talking to the non-technical person in the world. Now you see it. Now you see your chart, so you're doing good. Whatever you did, you're doing fine. So keep it up, buddy.
Okay. Well, what I did was I stopped sharing, and then I reinitiated the sharing.
There you go.
Was the problem. Okay, let's get back to it. This is a weekly chart going back about 10 years. And what I've done here is I've marked all of the major bottoms with a purple vertical line. And then I've put those dates into a spreadsheet, done an analysis. And there are a number of ways to measure central tendency of any data series. You can look at the average. That's the simplest. There's the median. There is the regression constant. One can do fast Fourier analysis also to determine the central tendency. I like the median. And what I have found here is the median going back for the last 10 years falls right at 33 weeks. And the low we had on November 21st was the latest in this, what I call the weekly primary cycle. That's about 8 months, approximately 161 trading days. And so just to give you a kind of a broad brush picture of where the next low would likely occur, 33 weeks or 8 months later takes us into July of 2026. Now, normally this 8-month cycle, 33 weeks, typically tops out with right translation right around 6 to 7 months. So you had 6 to 7 months to November 21st. That takes us into May of next year, or this year. So we've got lots of bull market.
Hard to believe it's come up so quick, right?
Yeah, lots of bull market. I spent a lot of time looking at numbers. I'm a numbers guy. I'm a math guy. I'm an aerospace engineer from my college training. And I look at Fibonacci numbers, and more importantly, I look at Lucas numbers. I might be one of the very few who has focused so much on Lucas numbers, but here's my table. And then I also multiply them by 1/2 and by 2. And Larry, these numbers tend to show up time and time again. And I find this column right here where my purple mouse cursor is by far and away the most important in projecting turning points in the future. Look at these numbers, 18, 29, 47, 76. You'll see these pop up a lot. All markets, all time frames. Let's look at the S&P 500 cash index. I ran this off just a little before coming on the air here. And take a look at the time counts. These are trading day counts from low to low, high to high. And oh my gosh, look at the Lucas numbers. Within one trading day, the low to low counts between October the 10th and November 21st was 30 trading days, which is just one day over Lucas 29. Same thing occurred between these pair of highs, between the November 21st low and the December 17th low. That was just one trading day shy of Lucas 18. So where am I going with all of this? Well, when I spin these dates out into the future, we see the market's coming down. If I add a Lucas 29 times 2, that's 58 for my table here, 58 into the future, that equals January 5th, Monday. If I take the low on November 17th and I add a Lucas 29, there's my table, Lucas 29, that falls on January the 6th, Tuesday. If I take a Lucas 11 right here, add it to the low that we saw on December 17th, that also aligns with January the 5th. So what is this telling me? I've got a clustering centered about January 5th, January 6th, that's next Monday, Tuesday, and I think we're likely to see a stock market low late in the day on Monday or perhaps shortly after the open on Tuesday morning, January the 6th. And I think from that point, we rocket higher.
Can you tell us what time of the day it's going to happen?
Well, yeah.
That was a joke. I'm making making something funny. That's
yeah. I think it occurs late in the day on Monday or shortly after the open on Tuesday. That's what I think. And not showing that
I like that opening part because you get some bad news over the weekend, and for 2 hours it goes straight down, and then it turns and goes straight up. So
markets,
I'm looking at that date too. We've got a monster Astro date on Friday. Oh my God, that's just
really.
It's a really big one.
What's going on there, Larry?
Well, on that day, we have Venus, Uranus, and the Sun at a conjunction, and that's very rare. It only happens once every 12 years, I believe, and if you went back and seen, those are pretty big turning dates that they've occurred, so that's a big day. It's July the 9th. It's a Venus, Uranus, Sun conjunction. I don't know much about astrology. I'm like you, Stan. I count the days, Tell me 56, I understand that. You tell me this other stuff, I've been afraid of it ever since I was a Catholic. You can't have false gods before you, so I've always been afraid of it. I looked at it, but I said, I see it work, and I see the Bradley work, but, I get by with AB equals CD. That's all I really need to do. I don't have to look at anything else.
Bitcoin after the break.
Yeah, you bet. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, folks, with Stan Harley of the Harley Stock Market Letter. Please continue, Stan.
Yes, Larry. I just thought I'd point out I had a couple of issues in a couple of our recent interviews with my charts freezing. And what I've learned is if I select stop sharing and then reselect screen share, that seems to solve the problem. So if any of your other guests have a similar problem, you might suggest that to them. Select stop share and then reshare it, and that'll do away with the freeze issue.
Yeah, that makes good sense.
Let's look at this Lucas table of Fibonacci, in particular Lucas numbers, and we saw where the number 18, 29, and 47 were very prevalent in the stock market. Well, let's take a look at another market like Bitcoin and see if we see similar numbers pop up. This is a log chart going back to the very first day of trading in July of 2010 of Bitcoin, all the way through the present. And it's a log chart, which makes it much easier to read than an arithmetic chart would be. But there's several things that stand out here. I've noted with purple vertical lines the major peaks, and take note of the spacing between these peaks. These are in months. 29 months. Sound familiar? Lucas number 29.
Yeah, sure is.
This one was 49, but that's just 2 months over Lucas 47. 47 months. The next pair of highs, exactly 47 Lucas months apart. The next pair of highs, exactly Lucas 47 months apart. I know nothing of the fundamentals of Bitcoin. I'm just a technician. I'm just a numbers guy, but there you go.
Well, I see Bitcoin what it is, but I don't trust anything you can't put in your pocket or spend it. You know, it's like driving a Tesla. If I can't hear that car start, you're not going to get me in it. Anyway, we have a question, Stan, for one of our listeners, and that is, tell us who Lucas was. He was an engineer, wasn't he?
No. Edward Lucas was a Frenchman. He was hired by the French government back in the, I want to say the 1880s, to be a mathematician for the French government, helping them with analyzing, I believe, I don't want to say he was like the chairman of the Federal Reserve or the Secretary of the Treasury, but something roughly equivalent to that. And brilliant man. He did a couple of things that I just think were remarkable. He went back and looked at Leonardo of Pisa's numbers, which we now call Fibonacci numbers, and he also looked at the ratios that the Greek mathematician Euclid put together, and he found they were related. And nobody before Lucas had done that. And so he wrote a paper on it, connecting the dots. He also gave Leonardo of Pisa the name Fibonacci, which sticks through today. And then he also discovered another set of numbers, which you see me show on the screen quite frequently, and these are attributed to him. They are related to the Fibonacci number series by the square root of 5. But these numbers, I find time and time again, are extremely powerful in forecasting reversal points. Time counts from highs to highs and from lows to lows. I find Fibonacci numbers tend to work better for measuring time counts from low to high and high to low, i.e. the diagonal moves on the charts. But the horizontal moves on the charts, in my experience, can be best described by looking at the Lucas number series, and secondarily, their half counts and their doubles. But boy, if you know that table I just showed, you got a lot of powerful information there. I don't think you'll find this in any book. It's something I just found on my own, sitting under the apple tree and got bumped on the head.
When he asked the question, I didn't know because I had not read much about it other than some of the things you shared me. Now, Stan, do you look at on the price action to something like, I look at ABCD and expansions and stuff. How do you determine on that day, like the 5th or 6th coming up, how do you determine what the price is that you want to be a buyer at?
That's a much more complicated question. Time is easier to forecast. Not to say that it's easy. It's easier, and there is a difference. Price is a bit more challenging. I have a number of techniques that I employ. Yes, I use Fibonacci, but I don't find it to be that useful. What I do find more useful is I will take a decimal range and divide it by half, divide by half, divide by half. Something W.D. Gann referred to as the natural numbers. And I've done a lot of work with that. I take those numbers and I multiply them by the Fibonacci series, draw them on my charts, and they do just an astounding job of forecasting support and resistance. I don't show that on the air, but since you asked me, that's how I do it.
Okay, no, that's good. That's very good, yeah.
If we got a couple more minutes, I'll continue with Bitcoin. Let me know how we're doing.
We got several more minutes, and plus we got that little break area coming, so just keep going. Okay. You're doing a great job.
Well, thank you. This is the chart of Bitcoin, the log chart, and a couple of other things, just in addition to the pattern of highs and Lucas numbers. Take note of the decline from the highs to the lows. They don't typically happen quickly. They typically span about 1 to 1.5 years. So if we just topped in October, it might be a little bit unreasonable to expect that Bitcoin is going to turn around here in the immediate future and rocket back to a new high. I think we're going to have to do the dance here below the 100,000 level, which brings me to what I was talking about just a little bit ago. I look at decimal numbers, 1, 10, 100, 1,000, 10,000, 100,000, and look at where the highs have occurred on the chart of Bitcoin. This high right here occurred just north of 10. We pull back below. This high right here occurred just north of 1,000. We pull back. The next high occurred just north of 10,000. We pull back. This high never quite reached 100,000, but the most recent high in October of last year did. Pull back, but we're pulling back below. And it's not going to be a V bottom. Stock market makes V bottoms, rounded tops. Bitcoin does just the opposite. Bitcoin makes spike tops and rounded bottoms. Spike top, rounded bottom, spike top, rounded bottom, spike top, rounded bottom. So I'm looking for a year minimum of downside before we hit some kind of a tradable low. And it may not be clean. It's probably going to be a rounded bottom when we bottom out. And then because we have seen right translation all the way up in these cycles, even the most recent one, right translation is indicative of bull market structure. So until we see left translation in Bitcoin, which we have not seen, we're still in a secular bull market in Bitcoin. So if the next move higher that takes out this high demonstrates left translation, well, then we got a major secular peak. We're not there yet.
Okay. Stan, thanks for joining us, my friend. We'll have you on soon, and may God bless. Love having you on, pal.
Thank you.
You bet.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, the gold trade didn't work. I just covered a short position here in the NASDAQ. You can see here on the bottom, there should be a cycle turning up in the Dow Jones. It's been leading the market. We're right over a pretty good buy. Now, remember that the other one didn't work very well, but we're over it right about now. So we've got another 15 or 20 minutes, but watch it through here because if we get a rally, we're going to rally up, and then we could rally for the end of the day. We'll have to wait and see because the market, the Russell's still up on the day. The Dow Jones is still up on the day, not by much, but the NASDAQ and the S&P are lower. Okay, so that's why I'm watching these numbers. We took out those lows, didn't do very much, but remember there was your 382 this morning. So if you just drew your picture from your high down to your low, that's no good. You'll see that comes in right there, boys and girls. That comes in at 25,233. That's what I'd like to see that thing hit here in the next few minutes, and then we'll see what's going to happen. Longer term, I'm still quite bearish, as you know, because of the margin debt that's out there and the fact that they don't have any excess cash to buy this stuff when the bargains do come to the table. So we're watching that very, very closely as we do everything else. The cattle just hit 236, which is a big move in cattle for the day. Also, there is a sleeper trade out there that we're going to be covering over the weekend. Can't believe this is Friday. I think it's Monday, but it's not. Anyway, really what I'm watching is that crude oil and natural heating oil might be turning around. You remember Bill Meridian was on a couple weeks ago and said that was his sleeper trade. So I've got a really tight watch on that. As long as we can stay above $56 a barrel, we're 57.11 now, we've got a pretty good chance. So live every day in an attitude of gratitude. May God bless, and Happy New Year to everyone. And we'll see you Monday on the flip side.